Hello guys, to another QuantWheel Live Lab. And on the last session, we spoke about the full wheel. I give you examples of the full wheel with demo trades, and watch the last one on our YouTube channel. And for today, we simple Q&A. Promote this live stream, but if you're watching the replay, you can always join and watch the sessions live or watch the replay on our YouTube channel. If there will be no questions of what the questions we got in the Discord in the last couple of days, but in the meantime, Ivan will show you a couple of his trades. So even if you don't mind, share a couple of things right now, and then if any other questions are Discord or in this chat, then I will answer them. Sounds good?
Awesome. Let's go.
All right, I'm going to. Can you see my screen?
Yes, we can see the
All right.
QuantWheel landing page.
Cool. All right. So a couple of things. People asked us who we are, what is QuantWheel, and I would like to go so you can see what's going on the landing page. If you have not tried QuantWheel, you can go to quantwheel.com. You can click new website. So probably some things are not working. You can go on the website on the left side in the sidebar. You can click today or use the sandbox. So you can check the tools we have that are free right here. You can use the tools. Calculator, maybe like max pain. Maybe you want to check optimal roll and calculate it. Or look at, for example, Gex. This is a pretty cool one. I'm going to show you how it looks like, how it works. Users ask for free tools, so we make them, and if you just want to use something very quickly, you can. And if you want to try the sandbox mode, go to the left sidebar, just click to use it. Next thing, if you want to learn about options,
look, to interrupt you, you're sharing a restream instead of your screen.
Okay, 1 second then. Tell me earlier, please, next time.
Yeah.
We will be the whole part of this live stream. Okay, I'm going to go. I'm gonna go.
Yeah, let's go.
All right, can you see now?
Yes, wonderful.
So for anyone asking questions, we got a couple of ones, and I'm going to go very quickly. When you go to quantwheel.com, you try the tool for free. Here, we even developed tons of tools that are free to use. You can explore, calculate, heat map, max pain, optimal, and so on. On the left side, if you click any button here, you're going to be able to QuantWheel in sandbox mode to see if you like. Our free course, and go to study how to trade options. We're working on upgrading it all the time. And if you're interested in what is on the roadmap or learn how to use QuantWheel, you can click here, see the roadmap, and read what is coming up. So just a couple of a few things about Ivan and I. We both had companies before. Ivan was one of the youngest senior engineering managers in Microsoft, and he was on AI and implementation of AI and he also was in MongoDB, main companies in that niche in the industry. And I've built businesses before in the trading space. TradeLocker, which is one of the biggest trading platforms with over 400,000 unique users per month is what I built apart from other businesses. And now we're building QuantWheel the same way. So a lot of different and interesting things are coming up soon. If you open the dashboard on the left side, you can see the action center. So how much money you got, what's the income, that potential income that you can get, and the what you can do today more money. This is my demo account. You can see that I can now roll Tesla put or roll Figma and so on, and then I can see this on the left side. You can also use the wheel, journal, gex, and much other traders summing up for the copy trader. If you're a great trader, you want to earn money from people who can do that in QuantWheel. And Ivan is working on upgrading platform non-stop. You already see a couple of amazing updates when it comes to the UX, and you're going to see the leaderboard soon. So how you compare to the other traders. Have any other questions? These were mainly we get asked from the people who want to join QuantWheel. So I'm just recording this to be able to send this to them. And if you're one of them, just watch the YouTube replay. Now, I'm going to leave to give the microphone to Ivan now, and he'll show you a couple of his trades and how he's in QuantWheel.
Awesome. Thanks, Luca. So I want to start by showing you the new Action Center that we've just released yesterday, and it's focusing purely on the profit and the profit you're missing and leaving it on the table. We want your daily session to be super quick, super short, and to the point. And that's why here, if you can see in today's wheel session, QuantWheel has identified 3.6K you can collect in premium today. In my portfolio, you can also see your progress. And yeah, I'm kind of almost halfway through in my yearly premium collection targets. In the active suggestions that QuantWheel found for me, let me just zoom this in a little bit. It identified some of the covered calls and cash secure puts I should be closing because they've rapidly increased in value. And after this stream, I'll actually go ahead and do this one. This is a great find. I do have around 90 positions, and I really cannot monitor all of them. So this kind of system fits perfectly into my schedule. And then also it detects rolls. So for example, copper has been growing recently, and I have a covered call on $39 strike price. It discovered I can roll to, for example, $40 strike price and collect $230 additional credit and increase my kind of ceiling. So it collects all these suggestions here, and you can see them live. If I refresh my page, I'll get the new ones as well. But also it gives you suggestions to sell more covered calls on the stocks you currently own. Or actually, this is a call I own, so it can suggest me even four-man covered call. And then lastly, also it tells me, hey, I need to deploy some more cash and collect. I can collect 1.4K today if I just utilize the cash I have right now by selling more cash secure puts. It also gives me alerts. For example, Platinum ETF is having a split. That's something I would have never found out about myself. And I'll just go through this in 5 to 10 minutes every day, and then I'm done. That's how I'm basically growing my gauge this every single day towards my yearly goal. My goal is 31% profit yearly. And just to show you how this looks like in real time, I just got one before the market opened as a prep. In my inbox, you just get an email alert. You can set up also your Discord alerts. But here exactly you get concrete suggestions, how much extra credit are you going to get, and get the calculated premiums. If you want to see more details, you just click on this link, and it's going to show you this visually. This is a link also you can share with others, but exactly here you can see at this point of time, QuantWheel suggested you to kind of roll this forward and collect an additional $132 premium. So this is how it looks like literally live as I'm using the product. All right.
I have a couple of questions, Ivan.
Go ahead, Luca. Yeah.
So, how did you with options, and what was the goal? Why did you even pick options to begin with?
Yeah, that's a great question. So I got introduced into options by my colleague in Microsoft in Vancouver, mainly as kind of a high leverage play. And at the moment, it was fun guessing kind of lottery plays. It was fun because I was used to leveraged trading from crypto back in the day. But I mean, initially you make some money, then you lose some money, and over the years I was as you kind of grow your strategy, you have to be very, very careful to the point to make some profits. But then I lost them all in like one bad day. So then I realized, hey, maybe I should, instead of buying premium, I should start selling premium. The goal is buying freedom. Like people always tell you, hey, to retire you need X amount of money, and then you estimate, hey, 3% on that or 5% of that. But no one ever tells you how to actually get that percentage. So selling premium, selling cash secure puts is you can count exactly how much you're going to get yearly on every single daily trade. And in the worst case, you end up investing in good quality companies. So I'm personally very risk averse. I'm here for the long run, and I don't need to chase 1000% gains. I'm happy with like 10, 15, 20% yearly while managing my own risk. Just putting the money right now into S&P is probably good for some people for the long run, but at the moment it's a bit too risky for me personally, and I don't manage it myself. So I rather sell cash secure puts that I can manage. I can roll them, or if I get assigned, I also have control over over it, whether I want to protect it with
And
protected
what's the
puts, if I want to
difference?
sell covered calls, and so on.
And
Yeah.
what's the difference between just investing in S&P and options?
I think they both have their own place. I think people should do probably both. S&P is probably just long term. Forget about it. Don't touch it for 20 years, and you just hope for the best. And it kind of tracks basically the best of America right now in the current volatility in the global markets. I'm not sure if people can count on that for their retirement. Yeah.
And when you say
Basically,
retirement,
yeah.
you're young, right? And most people who invest in S&P probably need to wait until they're 40, 50, 60 or longer until they can get the money out. What's the advantage of options compared to that? Like, what if you don't want to wait? What can you do with options?
That's a great question. So let's say the S&P right now crashes 20%, or like over the next 3 years crashes 40%, which is possible. It has happened in similar situations. Let's just remember the dot-com bubble. I'm not saying it's gonna happen, but if it does, people who need to retire over the next few years are gonna be crushed. Instead, if you sell cash secure puts on S&P, if the crash is happening gradually, you can basically just continue rolling the cash secure put lower, 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 and lower. And as the process goes forward, you're basically, by lowering your strike price, you're reducing your exposure to the crash. And while you're doing so, you're actually collecting more premium. So you're safer in that way, basically can manage your risk by rolling down your strike prices. And eventually you can decide, hey, now is the right time. I want to enter the market, and you're going to enter it at a much better price than it is right now. That's the worst case scenario. That's kind of the risk management. Yes. On the other flip side, what if it just continues growing and exploding? By selling cash secure puts, you might earn less, but that's up to you. Like if you need 10% to retire, and you don't want as much risk by just buying S&P, then cash secure puts is your way. If you're young, you don't care about 5%, 10%. You want long-term gains, then you probably need that upward potential, for which I also would recommend buying LIPs, basically long-term calls, and then you're gonna have a lot less cash exposure, but you can get the same growth potential by doing so. I think we can go into LEAPs strategy maybe in the next session.
For me, if you are like me, you're young, it is, and sunny, and you're looking at where to invest it, and let's say you can buy real estate. You're looking at assets. You can buy real estate, which is about 3-4% yearly in income from rent. Then you look at the dividend stocks. The best ones are probably very expensive, and you're paying a big premium, and you will earn about 4% maybe, and then you have to pay tax on them. And then the thing which is secure for me, at least, was selling options. With selling options, I don't aim at anything more than 1% per month, which is then enough for me to cover my let's say expenses. It depends on how much money you're trading with, but if you look into selling, really learn how to do this, and you're patient and you follow yours. In the worst case scenario, instead of 12%, you're going 8%, which is still more. And my goal is to earn the premium and spend it the way I want it. I'm not aiming to secure this money for my retirement when I'm 60, other investments until when I'm 65. I just don't want to spend money because it takes me 2 minutes a day, or even maybe less, if a week, to just earn that premium. If I know what I'm doing, in very short and quick amount of time, I earn the income that is kind of given to me, and then I don't need to worry for the rest of the month about earning more money, which S&P will not give you, which crypto will not give you, which real estate will give you, but much less, and maybe you cannot afford it. So my recommendation, and not a financial advice, the way I do it is I diversify. I have some real estate, but also a good thing to do is to generate some income that you can spend and diversify. That's where we rated QuantWheel. And Ivan, my is, have you retired, or could you retire if you wanted to, just by selling options right now?
Yeah, I'm in my 30s, and I think I still have the drive to create new things. So by retirement, I would say, yeah, doing things you want. I call it semi-retirement. Just by selling premium is possible. I mean, living in America is expensive, but if you would like move to some cheaper area, then yeah, definitely possible. Some nice place in Europe, or nice places in Asia, 100% possible. Yeah, life in America could get expensive. So if you have a decent sized portfolio, yes. But for me personally, yeah, I could retire in a cheaper place just by selling the premium. I'm just not the kind of person to like just stop doing anything.
The time you started, so whatever, 7-8 years, how do you compare yourself then to where you are now when it comes to income in with options and skills? What are top 3 things that you learned, and how did that affect your income?
That's a great question. I think the number one thing is just managing and recognizing FOMO. Basically, and fear. If you can know yourself, it's going to help you greatly. Like, for example, recently when the market was crashing, everyone was just panicking, including me, and learning to recognize that and start selling cash secure puts can be like tremendous amount of premium collection. If you feel FOMO, just take a break. Like, come the next day. Every day, every single day, there's so many opportunities. And I think just managing that emotion is the number one thing. The second one is just people try to read books about options or follow someone. Yeah, that's all great, but you need to really see yourself how the price of option actually fluctuates throughout the day, based on the news, based on the stock price going on, seeing how time changes the option price, and learning that, hey, just sometimes waiting can collect your premium. And yeah, it's a very, very complicated game. If someone tells you options can be easy, it takes time and thinking and actually looking through it. Like, if you're just trying to gamble it, get rich quick, I don't think
Yep.
that's gonna last for very long. So investing in yourself, getting that knowledge is, I think, crucial, and it takes time to just see it happen. That's our goal with QuantWheel, to make options simple, by having a sidekick, someone that can help you understand and make quick decisions as you're learning and growing. I think no one can ever stop learning
Yep.
in the game of options.
And what's the third thing?
The third thing, I think surround yourself with community. I'm learning new things with you. I'm learning new things from other traders with QuantWheel. I'm learning new things from other servers and our partners. Like, if you just sometimes I just observe what other people are doing, and I learn. Like, I was terrible at buying options, but by like looking at other people in, for example, copy trading, you can really learn a ton. I think that's probably the 3 points I would focus on.
Okay. And when you look at where you
What about you, Luca?
I'm I used to buy stocks with and hold them. Usually I would buy when they're discounted and sell when they appreciate 40, 50, 60. And I sold everything and started just a bit more than a year ago, or maybe just exactly a year ago. So with options, much experience when I started, but right now I know that like first 6 months I learned so much that I was angry that I didn't know this earlier. Opened my eyes to what financial education actually means, and I realized what is possible. So what I would say, my three things are when it comes to selling options when I started versus now. I think it could be simple if you pick the right stocks and follow your own consistently. As you or as I, I lost some money. Second thing, the premium that I earned is not bonus in life. It's earned even though it took a little of time. Buying some shitty, low quality stocks. Now I'm at almost zero with the low quality stocks. I'm at break even, but I lost some time, and if I didn't further ahead. And the third thing is stick to number of stocks instead of or tickers instead of trading many, just because to understand the chart and the fundamental earnings and everything else that you need to lower your risk. It's going to be very difficult. More 10 stocks, it depends how much time you got, but for me this is a little bit more passive than for other people probably. So those are the three things. And what would you say?
Yeah, that's a great point.
And what would you say when you started with your income that you were generating? What was the feeling like, and how does it feel right now? Was it very exciting then, and now it's like just another day?
Oh, that's a good question. Yeah, initially it was like I thought I found an infinite money glitch with selling cash secure puts and rolling. I think you might have remembered we spoke about it. And technically, yes, if you have something that will never crash to zero, and you have a system like QuantWheel now can alert you immediately when to roll, it can be that, but you still need to pick good quality stocks. You can't just go randomly. Like I remember going all in on well, not all in, but very high exposure into Wolf that actually went bankrupt, and that's a learning. So
Remember.
initially, yeah, I thought it's just you cannot lose money. You definitely can. You need to just manage your risk and have a system. Right now, it still does feel like you still need to put in some work and do your own research. QuantWheel is here to help you reduce that amount of time to like 15 minutes per day. But I think still it's not just completely passive. I think if someone is telling you you have completely passive income, that's probably like you need to take a deeper look into it.
I agree. What would be the number one advice for somebody who never sold a put or any option? Just one advice.
Wow, that's
Tell you
caught me
mine
off
while
guard there. If
we
someone
while
has
we
never
wait.
sold a put, yeah,
Yeah,
well, you go ahead.
I would say take the lowest cost stock so that you believe in. It could be $1. 100 shares of $1 is $100 that you're risking. Look at the option. You don't need to know what you're doing. Just ask AI what to do. The first put on that cheapest possible stock that you can find, which you know something about, and see what happens. And be patient. Just wait, see what happens. And every cycle, so after what month or whenever the option will expire, you will see what happens. You will see that premium, or you will get assigned. If you get assigned, no big deal. You have about $100 worth of that stock. If you don't get assigned and you get premium, you can just continue puts on the same stock and play with it. And the longer you do it, more comfortably with selling puts, that you will probably get assigned and cover the call, and you know the will already. That's my advice.
What price range would you look at? And any stocks you think might be a good starting point?
I would probably look at American Airlines. It's not $1, but it's about 15, I think, right now. I look at, which is really good quality stock, I think, for the future. I think it'll be very high growth stock, about $15 as well. And I would look at stocks that are there between $1 and $20 and that fit your budget, of course, that will not feel like a loss even if you get assigned and the stock drops.
Yeah, I'll probably avoid anything below $1 or anything below $3 or $4, just because it's there for a reason. But anything above $5, it can be a very good deal. Like I had a 1.5 year-old wheels strategy with Neo, where I would just sell puts, roll them, get assigned, cover calls, and so on. Yeah. Also, right now Ford is maybe interesting. It spiked in the volatility, but it's a long-term stock around $13.
Yeah, I would also
That's a good
I would
point.
recommend anyone looking into starting not to. So there are penny stocks, but also if a stock is cheap, it doesn't mean that it's not quality. A good indicator for me when I'm looking at those cheaper stocks is many strike prices are there. Not strike, yes, strike prices, dates there are. Usually, if there are many expiry dates, it means that the stock is very popular. There's a lot of liquidity there. A lot of people are trading options. So even if you wanna trade, you will have a lot of opportunities with that ticker. And if it was a penny stock, it wouldn't be that popular usually. But that's not a rule.
Look,
Make your own
we
research.
have a question about DTE. Any suggestions? What do you use for DTE usually? 30, 45 days?
I have when I
Anything
started, I
shorter than that?
used 30 to 45 usually, somewhere between. But now I do something a bit different. So when I started, I picked all the stocks, but I like literally 50x or whatever since then. And they're good quality stocks in my mind, usually data centers, energy stocks, and so on. So connected to AI. What I would recommend is with stocks that you believe in and the stocks that are high quality stocks that you think will grow, pick short date, not 30 days, but 7 days. So for example, what I do is I pick shorter expiry date, and it's very volatile, but in the next 7 days, because of volatility, because of high, still happy with the stock with 1-2% per month for it to get a some growth 30, it should still mean appreciation in 40 days for me, and it will grow. And even if it happens and I lose that stock, so I have to sell it in profit, I still have a huge profit on that stock, and I can buy it again, cash secured put, risky quote marks, which will get me assigned on purpose at a lower price again. So with quality stock, summers I pick more expiry date. More often, I run the wheel more often because I know that'll grow long. Thing I would not, maybe not really hold that much. I'm then picking a longer one. So if I don't care if I'm gonna get assigned and have to buy or sell, then I'm going to pick a longer one. But if I care about that stock and I think it'll grow double whatever in the next year or so, then I.
For me personally, in this market that's very volatile, I do look for my current sweet spot is find something that had a sharp drop or actually even a sharp upside, spiked volatility, and then sell 30-day puts on the support levels. For example, right now, I don't know, half hour ago before the stream, I saw the put on silver because it dropped. A day before or 2 days before, core wave or circle that had that kind of volatility, chopping, spiking up, spiking down, and then 30 days gives you a lot of premium. So if the volatility stops, I can get, I don't know, 40% of that premium is a meaningful chunk of money in just 1 or 2 days. So I usually never wait for 30 days to expiry, but in this market, kind of selling 30 days but cutting it in the next few days is kind of a sweet spot at the moment for me.
Yeah,
And I agree with Luca.
I
If I
agree.
have my dailies, my things that I like for long term,
Yeah.
weeklies are great for just I mean those premiums compound, right? Like you sell it this week, and you can sell more next week, and it just compounds over the year.
What I would recommend is start with 30 to 45 days. And once you're comfortable with all strategies, you will have your own. Like this is just what I'm doing. It doesn't mean else because it depends on the stock and patience, risk aversion, and stuff like that. So that's what we need to right do.
What about you, Forrest? Any thoughts? You can drop it in the chat or Discord later. That's a good discussion.
I would say so. What is interesting, what you said in this kind of market, either things will explode and grow, growing very fast, at least, or all have massive drop. And I don't know, preparing for the massive drop. And even if it drops, I want to be able to hold for 2, 3, 4 years and still earn money. So I'm buying those stocks which I believe in, and I think there is no chance that AI stocks will go lower than some point. I think they're just going to go up because every single industry is going to get affected. So data centers, energy, AI stocks, they're just going to continue long term growing. In the short term, they might drop. When it comes to everything else, I'm trying not to even buy unless I have another account where I will buy maybe some dividend stocks, like waste management stocks, or things that people cannot to pay. I think that's a good. And another thing what you can do is you can just, if you have a little bit more money, sell cash securities on S&P. And if you get assigned, get covered closest strike price, and just repeat that. That's also a good strategy. And Forrest says he's
Look at
mm-hmm.
Well, I mean, you mentioned that the market right now is in a very interesting spot. I can share a few interesting charts that kind of prove that we are in historic levels. But yeah, Forrest is asking any plans to expand to other option strategies like condor spreads, etc. Yes, 100%. And so spreads and leaps are definitely high up in the air. There is a roadmap you can take a look at for QuantWheel. It's QuantWheel/roadmap, I think. And then condors are definitely up there, but probably not this quarter. Hopefully next quarter or something like that.
Forrest, I
I
have a
use.
question.
Yesterday I sold one spread, and having QuantWheel would help me a lot personally as well. Go ahead, Luca.
Forrest, I have a question. When you're talking about other standard spreads and so on, how would that look like? How would the perfect feature for you for those strategies look like? Interested into what you think, not what already exists there. If you can, while we speak, please explain just in very brief or in a bit more detail, because it will help us a lot to understand what we need to build to other strategies. With option selling, it's pretty straightforward with the score. With buying strategies or combination, it's a bit dynamic. So GEX helps, but we want to see what else would be equally useful as the screener is for selling options. Yeah, Ivan, the chart.
Yeah, this is something I shared on my X like a week ago. I think no one noticed it before, but look at this beautiful chart. Basically, this is SPX, S&P 500 index, divided by the money supply of dollars. It's at the exact same point as it was before the dot-com burst. This is like on the dot, literally on the dot right now. So, I mean, I don't know if it's going to go higher or not, but let's assume it drops and kind of bounces off of that level, at least temporarily. I mean, that could mean two things. Either S&P goes down on its own, or there is a huge spike in the money supply and huge inflation. Both of these are very interesting. And I do agree, Luca, with you, like we are at the precipice and very interesting time in the market. Similar things, if you like look at, I don't know, gold versus S&P 500, also at the very, very interesting support levels. This, we need to go into monthly chart. I have it already annotated. If you take a look, 70s, 1973, we had the exact same kind of bottoming structure, if you can see. Break above that bottoming structure, a pullback that's kind of circled in red, and then gold exploded in the late 1970s. Literally, like it's, I don't know, 10x or something, while the S&P stayed flat there was a lost decade basically. Similarly, also we have the moving average in play. It looks very, very, very similar to the 1973. Again, the war time, the sticky inflation, it rhymes perfectly well. So these are some things that are really, really historic, and people need to take into account when investing into S&P. Just looking at the longer term picture, yeah, it could get very volatile. I'm not saying it's gonna do so, but those are some very interesting things I noticed like a week ago.
The interesting thing for me here is if a couple of things that could happen. There could be mass prosperity and everything explodes. There could be that the money printer is turned on again and
Yeah.
inflation skyrockets and everything skyrockets again. And there could be that there is also massive correction that is investing into, like, everybody's buying at the top basically right now. It's like, everything's so expensive, not everything, but most things that are interesting are S&P included. And the chart that you showed, how long it took for S&P to at some scary to me. Like if I had to keep S&P for 10 years, that would be scary to me.
Yeah, I mean, it does seem like nominally S&P is at all-time highs and crushing it, but look at this chart. Basically, looking at a real value, it's not looking that great if you look at it from this angle, because dollar is devaluating very quickly, and this kind of support level that was here over decades. Again, similar structure. This is kind of head and shoulders, multiple support lines, break below that, and look at this again. You broke the neckline, got a little recovery, but then you crashed very, very heavily.
Yeah, it looks
And we are kind
very.
of at a similar situation here, right? It looks exactly the same. So like S&P, yeah, in nominal USD terms is crushing it, but if you look compared to gold, yeah, that paints a different picture.
Yep.
Um,
True. Right, an interesting one. I think in the next sessions we should talk more about the strategies, about option selling, and like in use for life. I think those questions were interesting, and the feedback we got was pretty good. So, guys,
Thank you,
if you want to,
Forrest. That's yeah.
yeah,
Yeah,
thanks.
I would like to see the
Thanks.
feedback from for Forrest. So there's some delay going on, but yeah, I would love your feedback as we start developing that. I'll definitely reach out. We can jump on a call.
Yeah, Forrest. Also, if you want to share what on the live stream, you're welcome to join us on Tuesday next week or Thursday next week. And if you would like to share in mind with when it comes to other strategies, what would help you, let us know. So I think we should wrap it up. Thank you, Ivan.
Yeah, great session. Thanks all for the feedback, and let's continue growing together.
Thank you, guys.